Today's conference is being recorded. At this time, I would like to turn the conference over to Mr. Richard James, Head of Investor Relations. Please go ahead, sir.
Good morning, ladies and gentlemen, and welcome to VEON's third quarter 2018 results conference call. Today I'm pleased to be joined by Trond Westlie, VEON's Chief Financial Officer, and Kjell Johnsen, VEON's Chief Operating Officer. Trond will start the presentation with the group highlights. Kjell will then cover the Q3 country reviews. Finally, Trond will run us through the detailed group results and provide an update on our 2018 outlook. At the end of the presentation, we'll open the line for the Q&A session. Before getting started, I'd like to remind you that we may make forward-looking statements during today's presentation which involve certain risks and uncertainties. These statements relate in part to the company's anticipated performance and guidance for 2018, future market developments and trends, operational and network development and network investment, and the company's ability to realize its targets and strategic initiatives, including current and future transactions. Certain factors may cause actual results to differ materially from those in the forward-looking statements, including the risks detailed in the company's annual report on Form 20-F and other recent filings made by the company with the SEC. The earnings release and earnings presentation, each of which includes reconciliations of non-IFRS financial measures presented today, can be downloaded from our website. I would now like to hand over to Trond for the group highlights. Trond.
Good morning from me as well this morning, ladies and gentlemen. So this is the third quarter update from VEON, and the starting statement from us is that we have a good operational performance in the third quarter of 2018 with a total revenue of 2.32 billion. And of that, mobile data is 548 million with a organic growth of almost 29% or 28.5%. So we're also seeing good organic growth in EBITDA of 4.6% to 848 million, even though its reporting number is coming down due to the fact of a settlement that we had as an income last year together with the currency effect. I'll come back to the currency effects later. Equity or cash flow conversion in third quarter was stable considering the previous quarters, so 263 million coming into equity-free cash flow in the third quarter. And as a result of the proceeds from Italy coming in, the net leverage was coming down to 1.7. In addition to that, the corporate cost is 92 million, since the focus on optimizing the corporate costs is one of the elements that we're following this year and working on this year, which is a 30% reduction from previous years. So that's really the headlines for this quarter. When we then look at the trend line, as we have been working on, we have worked on the four topics of simplifying structure, emerging market focus, progressive dividends, and a strong balance sheet. Starting with the simplified structure, we have, and so far this year, changed our operating model by canceling the regional setup. We have reduced central responsibility of functions, and we have established a chief operating officer with direct operational responsibility to all of our countries. And of course, those elements are helping us being more efficient, and as a result of that, also affecting the HQ costs. So we are on track to half our run rate of corporate costs if we take the starting point from 2017 of 430 to the run rate out of 2019. So all of that is happening, and we are en route in doing this. So that's one part of the simplified structure. We are continuing to explore opportunities around GTH, even though we have not been successful in our 2 attempts so far this year. We are still having that as an ambition. In addition to that, on the structural element, we have completed the sale of our Italy joint venture. And one thing that also happened in the quarter is the termination of the Pakistan tower transaction. All in all, a good progress on the structural element during the quarter, and that leaves us on a more emerging market focus going forward. On the dividend side, we paid our interim dividend of 12 cents during the quarter, and our dividend policy is still firm. Stronger balance sheet. The stronger balance sheet has come as a result of receiving the proceeds, and we are now down at 1.7 in gearing level. Just the status then on 9 months. We see that the trend line, good progress year to date, and we have slightly upped our guidance. Total revenue of 6.8 billion with a 3% organic growth, 2.6 billion in EBITDA with a 5.2 organic growth. On the revenue side, we have upped our guidance to low single digits, and on the EBITDA, we have upped our guidance to low to mid single digit. And on the cash conversion, the equity free cash flow is 804 million so far this year, and we have maintained our guidance on around 1 billion, but as I also said earlier, with a slight pressure on the downward element of the around. If I then move to the revenue and EBITDA development, we see on the revenue side 2.9% organic growth. Trend line is continuing, voice coming slightly down, and data and MFS is the growing part of the revenue content. To the left, you see significant forex impacts coming from, of course, Uzbekistan. This is the last quarter. We have the effect of the devaluation of the Uzbekistan currency. But in addition to that, we also see trend lines both in the rubles as well as the rupee as major contributors of the 289 million, coming then to a reported revenue base of $2.3 billion. On the EBITDA element, 4.6 organic growth, improved effect from service revenue, and the cost base stay flat year over year. The currency impact here is 122, and that leaves us with the 848 million in EBITDA. If we then look at the country contribution in the revenue and EBITDA evolution, we see that Russia, Pakistan, Ukraine, Uzbekistan is the contributor of the growth, with Pakistan having an impressive growth rate this quarter, and Kjell will come back to that. And then Algeria, Bangladesh, year over year shows a negative trend as a result of the turnaround and not being effective year over year yet. Same forex effects, and then you see the top line effect of Eurosat to the right with $73 million. On the EBITDA involvement, it's really Pakistan, Ukraine that drives the improvement elements of the EBITDA, while Algeria is the driving force on the negative trend, and the remaining part is fairly flattish. And then to the right, you can see the corporate cost involvement. It's a reduction of the 44 million year over year. And if we then turn the page to corporate costs, you see that we have continued progress in reductions. And corporate costs now were 92 million compared to previous year of 136. And you can also see that in the year-to-date numbers of the headquarter costs coming down from 306 in 17 to 224 in 18. So all in all, we are confirming our target to reduce corporate costs by the end of 2019 compared to 2017 with 50%. And we believe that that is in progress. No need to say more about that right now. So all in all, financially, a good progress and continuation of the direction that we have said before. So, Kjell?
Yeah, thank you, Trond, and good morning to everyone on the call from me as well. I'll take you through some of the numbers and developments in our different countries, but let me first dwell a little bit with our digital journey. Within VEON, we have come quite far in our digital aspirations over the last couple of quarters. I'm happy to say that the work we do on digitizing the core and changing the customer experience in our opcos is bearing fruit. We see that we have launched from the platform side the DBSS, the core platforms in Georgia and Algeria. Important steps, complicated, but starting to give us clear operational results in terms of simplification. We have taken a lot of the learnings in the development of the VEON platform. We're applying them now through our self-care platforms in multiple countries. In some countries, this will mean an upgrade of the existing capabilities, for example, in countries like Russia. In a country like Pakistan, it means introducing new capabilities to the market. We're also deriving value, both internally and externally, from our DMP and big data capabilities, where we are actively using this in our upselling and also in selling to third parties. With the Pakistan MFS services, we have a strong position that we can continue to build on in the local market. We have continued to develop the VEON platform and are looking at different options for applying those learnings in the markets. And of course, the Beeline TV has now come in a new shape, which basically looks more like Apple than cable TV of 5 years ago. And we're very happy with the uptake and the reception this has received in the local market. We look forward to replicating some of these learnings also in our other markets. Moving to the country-by-country review, I think, as Trond said, we're happy to say that we have organic growth. This comes partly from the fact that we have an understanding that we are not selling voice minutes and bytes. We are selling mobility to people and to companies. And this is a fundamental difference. We're going into a world where we sell bundles and we sell experiences rather than selling minutes and bytes. And some of our countries have been very proficient in using these upsell opportunities and these messages. And that's why we do see we have a organic growth in our system. I'll take you through the country-by-country overview. And let's start with the biggest country, of course, which is Russia. Happy to say that we have top-line growth. Some of that is down to the introduction of or inclusion of Euroset, which gives us more handset revenues. When you look at our EBITDA, that of course also has had a cost side, which we have outlined before in terms of the build-up of the retail, but also in terms of the revenue mix changing from almost purely operator revenues to now including also handset revenues. The good news is that Euroset is fully integrated in our system and our channels. We are now also able to offer an omni-channel experience in Russia, So we see increasingly that people start their purchasing process at home or on the device and end it in one of our shops. We also have almost been able to turn around the fixed revenue. As you may know, we separated out the VWS, the wholesale services. So if we adjust for that, we are getting into a turnaround level in Russia on fixed. So EBITDA overall, underlying developing quite well. We have an impact from the revenue mix and from the integration of Euroset, which turns it year over year negative. The outlook in Russia is mixed. We think that the industry has been able to focus on creating value for some time. There are some early signs of the unlimited coming in, but at very high levels at this stage. So short term, not a big risk factor. We are working actively on streamlining our cost base in the Russian market, and would characterize ourselves as modestly optimistic about the development of Russia going forward. If we look at Pakistan, we are cementing our number one position. We are developing well compared to competition. The varied integration is fully done, so the company is completely focused on delivering value in the market. The headline growth of 18% is somewhat influenced by the suo motu from the Supreme Court. But I'm happy to say that even if we adjust for this, we see that both revenues and EBITDA grow at the same pace of more than 6%, which is a very, very healthy signal. And Pakistan is now in the midst of a very active 4G rollout, where we are very well prepared. We are at good pace in terms of continuing to deliver as number one in the Pakistani market. We also see that our customer base grows, and as you know, of course, Pakistan is a country with secular population growth, so adding maybe 3 million people per year. So a very interesting market for us also in the longer term. Within Algeria, I think it's fair to say that we see signs of stabilization. When we look at our operational performance, we're doing well inside the industry, with some good comparisons to the other players. We also see that we are in the midst of rolling out networks, but we are benefiting from the investments we did in 2017, and we have been able to capitalize that advantage, especially in the capital of Algiers, where we have had very good uptake over the last half a year or so. We do see sequential customer and revenue growth, which is a good sign. We would love to see year-over-year growth also, and think there is a distinct possibility that we will get to that point within the next few months. We are working also hard to make sure that the regulatory side keeps a pace with our ambitions to build networks. That is always a bit complicated, but we do see some positive signs around that as well. In Bangladesh, we're also using the formulation of sequential improvement. We are, in a way, happy to see that in the last couple of months we've seen some signs of month-on-month growth. Obviously, at the end of the day, we would like to see year-over-year growth. So there are some positive signs building upon the spectrum that we have bought and the investments we have made throughout this year into our networks. But there is no way we can move away from the fact that Bangladesh is a very challenging market, and in all likelihood will remain challenging for some time ahead. Overall, compared to competition, our position has strengthened somewhat over the last year or so. Moving on to one of the absolute stars, the Ukraine is doing very well. We have rolled out the main push within the 4G rollout, and we see a strong network performance. We see a company that execute as leaders of the market in terms of setting the pace and setting the transition from a 3G world to a 4G world. We do see an ARPU uplift that helps us to compensate for the currency fluctuations and the inflation of the country. And we see an EBITDA increase of around 20%, which obviously is a good result. So for Ukraine and Kyivstar is about keeping up the good performance going forward. Uzbekistan, also one of those countries that has secular population growth, very young population with an average age in the low 30s. We see revenue growth. We see a fast uptake of 4G. We have an exceptionally high tax burden in Uzbekistan, but the good news is that the very special super profit taxes are announced to be changed from the 1st of January, which would reduce the tax burden a bit. In terms of our execution in the local market, we are the clear market leader. We are operating as market leader, setting the pace, and we are also performing well compared to the competition. And we're of course very happy that the liberalization of Uzbekistan has led to the opportunity of cash upstreaming. So we are repatriating cash from Uzbekistan now on a fairly regular basis. Those will be the main countries that I would like to touch upon, and I'll then hand it back to Trond.
Having then got the review of the development and composition of the revenue and EBITDA, I'm going to take you through the rest of the Q3 income statement. Going then from the EBITDA of 848 million for the third quarter, we're seeing that depreciation is upholding on the same level, but we have an additional impairment cost putting into to this quarter of 781 million. Internally, process-wise, we have moved our internal time for annual review of impairments to the third quarter, so that we're not conflicting with the year-end process. And as a result of that, we have done the annual review during this quarter, and that has led to the charge of 781 million. The biggest one in that is Bangladesh with 450 million, and the remainder is almost evenly divided between Algeria, Armenia, Kyrgyzstan, and Georgia. That leaves the depreciation amortization on 1,239 million, and that leaves a negative operating profit of 391. If you take out the impairment level, the operating profit is positive with 390. Financial income expenses, same level as previous years, and Forex and other gains are negative with 37, while in 17 it was positive with 25. The biggest difference there is that we had a settlement relating to wind in 17 with 44 million that made the positive element in 17. And this year we have closing out some of our euro derivatives when paying down our euro debt during third quarter, and as a result of that, we have a small charge on that in the other gains. The Forex part, both in 17 and 18, is at the same level. And that leaves us a profit before tax of 626 of loss. The taxes come down to 92. It's a big decrease from last year. It has two major effects of that decrease. The one is the effect of the impairment in Bangladesh. It's a deferred tax element due to the fact that there's no goodwill retained in Bangladesh, and therefore we are offsetting in towards assets and intangibles. And when it comes to Pakistan, it is mostly relating to that we had more withholding taxes in 17 that we do not have in 18. And that leaves the tax charge of 92 million going then to profit and loss for continuing operation of 718 as a loss. The profit from the Italian sale of 1,279 with a non-controlling interest of 294. That leaves a net profit to VEON shareholders of 561. Going over to the cash flow generation, and as I said, following the same trends as previous quarter, good cash conversion, looking at the OpCos and the operational cash flow, all of them positive. So we see the trend line moving the same direction that it has been doing. So 230 from Russia and 159 from Pakistan, and the smaller numbers coming from the other entities. On the interest, taxes and others, you see a big payment of 266, and that is more specified on the next slides. The cash flow reconciliation table, that is just to show you the context of the reporting numbers. So 848 in EBITDA, cash flow from operation of 579, seeing that net interest paid is 152, slightly up from last year. It's more periodization than anything else, and the income tax paid is slightly higher due to higher taxes in Russia and Ukraine as a specific element. Licenses of 311, that makes the equity-free cash flow, excluding licenses, of 263. If you again go to the net debt development, starting this quarter with 8.6 billion, 2.8 billion coming in from Italy, EBITDA on 848. You see the financial charges of 152, taxes paid of 112, and then the capex including licenses, that's the 311 of capex and license of 16 of 327. And then we have, of course, the forex conversion and miscellaneous of 184. That leaves us as a 5.7, which is the last 12 months rolling 1.7 times of gearing level. Going then to just to wrap up on our guidance updated. As you heard, we have slightly upped it. Starting from the bottom on the equity-free cash flow, we have not adjusted it. It's the same around 1 billion level. And then we have upped the total revenue and EBITDA. And on the revenue side, our guidance for the full year is now low single-digit organic growth. And on the EBITDA level, it's low to mid-single-digit organic growth. And as you can see from the 9 quarters, the trend line is then continuing, but we do see then a slight challenge to or more pressure on an EBITDA in our 4th quarter compared to the average of the first 9 months. So with that wrap up, I do think that, as we said, a good operational quarter, good results coming out, challenging currency development, as you can see from the reported number, but all in all, good progress on our medium-term strategic objectives. So with that, I'll turn the call over to the operator to take your questions. Operator?
Thank you. If you wish to ask a question at this time, please press star 1 on your telephone keypad. Please ensure your mute function is switched off to allow your signal to reach our equipment. Again, please press star 1 to ask a question. We will now take our first question from Alex Kabegi from Renaissance Capital. Please go ahead.
Yeah, good morning. A couple of questions from me, please. If I start with Russia, firstly, on the subscriber base, I mean, it has been decreasing, especially vis-a-vis your competition there. So I just wonder what are the reasons for the main leakage, and also what do you think you can do to reverse the situation there? The second related to Russia question is your retail strategy there. I mean, you restructured already these Eurostat shops. I think your Svesnoy agreement is coming to an end in the first quarter of 19. So could you just tell us maybe how do you see your retail footprint generally developing? Are you looking at shrinking it? What can we expect from the retail presence in Russia? Now, moving to Pakistan, just to understand also the nature of the regulatory non-approval of the tower sale. Is that something structural? So you cannot go back to a possibility of selling towers in this country, or is it something which can be overcome and you would still look for possibility of offloading towers in some near future? And lastly, a very quick one on the IFRS 16. Just maybe if you could give us a color in terms of what could we expect in terms of improvement or change on the margin side, because we've seen a couple of companies adopting it already, the standard. And while there is not much change on the cash flow side, the EBITDA tend to either go significantly up if you have a lot of off-balance sheet leasing obligations or not. So if you could just give us a rough color, what kind of impact on EBITDA margin you would expect from adoption of IFRS 16 into 19 would be helpful. Thank you very much.
Yeah, Trond, should we do business first or IFRS first?
Why don't we do business first?
Let's do business first. All right. To your questions about subscriber base in Russia. As you know, Alex, the composition of the customer base of Beeline has traditionally had lots of migrants. Now, when we are executing the change where we're moving towards our own retail, where we're moving out of alternative channels and out of multi-brand channels, not completely, but to a large extent. You mentioned Svesnoy yourself. We still have some exposure there. That has led to a recomposition of our customer base. Our choice to go out of alternative channels does to some extent come at a cost. We should all remember that the sales that are going on in alternative channels will be illegal at some point in the near future. So people jumping in to fill that void are doing that at a risk to themselves. So we have made a very clear move into more of a monobrand, less multi-brand, and zero or very limited alternative channels. And alternative channels only when we can execute the minimum amount of control on registrations that are crucial for that market. We're also focusing on value. We're focusing on ARPU, and subscriber numbers are important, but we focus on the whole equation, and the whole equation looks pretty good. When it comes to retail, yes, we are executing fast on the integration of Eurostat. This has been done, and I talked a bit about how we are moving into an omni-channel experience, which is up and running today in the market, which provides more value to the customer base. So there is no doubt, and I've been vocal about this before, that we believe the longer term and even the kind of medium term outlook is that multi-brand should take a much smaller part of retail in Russia. Now, whether or not that means that we will work with Svesnoy for longer time than what we have contracted at this stage is not something that I want to go into detail on this call. That's a commercial decision that we have to make together with the Russian management team. But the direction is to move towards more monobrand. And I also believe, you asked about the number of shops, that the industry, once we have finalized that pivot towards monobrand, will reduce capacity overall. I think when we look at it, it's clear that there are too many shops in Russia compared to an ideal scenario. So that is an upside for the industry in the medium term. We get that right. And then you talked about Pakistan.
Yes.
Yes.
The tower and the reason for the PTA not approving or giving us the approval. Well, we have not got sort of a written response relative to explaining why they haven't given us. So it's more like our understanding on what has happened in the background that is the reason for this. And to us, it's not the structural part that is the reasoning for this. It's more about participants. And so it's not the industrial play or the involvement as such. It's more the parties involved and the structure of the transaction as we understand it. But that is purely our interpretation of it. When it comes to the IFRS 16, we are not ready yet to give you sort of an indication of the numbers. We do have, of course, internal numbers that we're working on, but we are not in a position yet to give you that overview. We still have the statement that it will be material, and as you're alluding to, it will not have cash flow effect, but it will, of course, be effectful relative to how you see the numbers. We will come out with the numbers as soon as we can, and maybe we're able to actually disclose it before year end or before we announce the fourth quarter, but we have to work on that and see the timing of that. But as you say, it's an accounting method. We have more than 100,000 contracts to register to actually make sure that we can have a clear enough or concise enough number to present, and we're in the midst of that right now.
Okay, understood. Just to clarify on the regulatory side, so if and indeed this the explanation is as you said, John, then that could mean possibly that as long as you find another party, the sale can still be completed.
Well, the element is, as I said, there is no industrial or structural element that we understand is the argument. But then again, it's our interpretation.
Yeah, understood. Okay, thank you very much.
We will now take our next question from Matthew Tate from Morgan Stanley. Your line is open. Please go ahead.
Yes, hi. Thanks for the call. Just two questions. Firstly, on the GTH side, you mentioned that you're still exploring options. So I'm just wondering what are those options you're exploring at the moment, and is it a possibility to retry the previously tried options still? Then secondly, are there any licenses or spectrum auctions due in the next 12 months? And then thirdly, just wondering, how are you using the cash you received from the Italian sale? I mean, how much of that will be used to pay down the debt, and how much will be used for the corporate purposes, and what is the timeline on that? Thank you.
Well, when it comes to the GTH options, as we said, we are continuously working on finding or solving our structural challenges through our GTH ownership. It's not like, I think that you as analysts as well as we, it's not like we're trying to invent possible solutions here. So I don't think that we can come up with different kinds of structural solutions that we have been doing. There might be packaging that might be different, but we are the way we're doing this is continuing our dialogue with the Egyptian environment, both the minority shareholders there, as well as government bodies, and GTH is doing the same thing. And we are, of course, also talking to the international minority investors to try to find opportunities. And we are continuing that dialogue. As of now, we have nothing more to say in that regard. Coming to licenses, the only license that comes out in 19 of substance is really Pakistan of renewals, and what's coming up. On the Italian cash, as we said, we are looking to use the proceeds from that to debt repayment and general corporate purposes. And as a result of that, we have repaid debt during our bank debt during third quarter, approximately $800 million. And we are looking at continuing repayment of debt, both on the bank and corporate side. And we haven't decided on either timing or structure on that yet. We'll announce that to the market when we made our final decision. And if you then ask me how much is general purposes and how much is repayment, well, I guess we have to take that when it come back to next quarter.
And just following up on the Pakistan license renewal, is there any indication on the potential cost or any other obligations required at this stage?
Not really. We haven't looked at the details, and I don't think that the elements and the details have been announced yet. We know it's coming up for renewal in the fall of or second half of 19.
Thank you. And very quickly, last question. Any update on the search for the group CEO? Thank you.
Not more than it is ongoing, and the board is diligently working on finding candidates. So, and as you know, in these processes, we are not going to say anything until we have something to say.
Okay. Thank you.
As a reminder, to ask a question, please press star 1 on your telephone keypad. We will now take our next question from Hervé Duret from HSBC. Please go ahead.
Yes, good morning. My first question is back to GTH on the option. Can you give us an update on the plan of the right issue and potentially, the repayment of the corporate shareholder loans from GTH to VEON? And the second question is regarding back to the Pakistan tower sale. Was the blocking factors for the transaction more towards the type of the financing that was arranged, or was it other reason that blocked the transaction?
Well, on the take the Pakistani thing, I'm not going to give more specifics than that because it's our interpretation, and it's not like we have a written response from the authority to actually say why they did that and why they didn't. So, as a result of that, I won't be more specific. That our understanding is that is not industrial, it's not structural as such, from an operational or point of view. And then we just have to, the strategy of VEON stays the same. We are looking for balance sheet optimizations. We're looking for the same in-market consolidation. We're looking for the structural solution on GTH. So our ambition, our strategic ambition of going in this direction stays the same. But of course, we need to find solutions that can accommodate the local legislation and the countries, as well as our ambition to proceed. So it's a combination. On the GTH rights issue, then I have to refer you to GTH. They are in the lead of the process of that rights issue. So it's coming back to the statement they made to the market previously that if in case the transactions that we had proposed did not come through, it was likely or it was probable that they would come out with a rights issue. I expect they are now working with that as a result of the funding situation in GTH. But as of now, I cannot give you more details. And when it comes to the intercompany or the lending, VEON is either guaranteeing or lending the whole balance sheet of GTH. So we are very much involved in the funding and the guaranteeing of that funding in GTH.
Right. And maybe just a follow-up questions, maybe then on your asset-light strategy. I mean, do you believe there is further room potentially? I mean, especially after what happened, with the tower sale termination, in Pakistan. Do you think there is still further room for you to be more asset-light, as was, highlighted previously in your strategy? Maybe in other countries or back to some of the countries in Pakistan, or do you think that there is possibilities there?
Well, we still think it's possibilities, but of course, when you have worked on a transaction for more than a year and it's terminated due to the fact of authorities not giving you the approval, of course, you need to revisit how you want to proceed and how you want to go forward. Having said that, that doesn't say that our ambition still remains. So we would just have to cater for that. The probability is then, of course, how can we find solution or counterparts or finding structures that both operationally as well as financially is sound in the development of Pakistan. And then that's right now that is much too early to have any views on our side.
All right. Okay. Thank you.
We will now take our next question from Cesar Tiron from Bank of America. Please go ahead.
Yes, hi everyone. Thanks for the call and the opportunity to ask questions. I have 3 questions, if that's okay. The first one is on Russia. In the press release, you suggest that unlimited offers don't have much of an impact, but how do you think about the risk of subscribers that have an ARPU which is higher than the unlimited offer price plan, for example, 1,000 ruble in Moscow, and might be tempted to downgrade to the 650 unlimited offer? Second question, still on Russia, can you please confirm that the spectrum fee increase in Russia is just for 3Q and 4Q, and we're not going to see such charges in 2019? And then third question on the guidance. I just wanted to check if the decision to not increase the free cash flow guide despite the increase in your organic revenue and EBITDA guide is solely due to FX and not, for example, your expectations that you'd spend more CapEx in Q4 than you initially expected. Thank you so much.
Yeah, on your question about unlimited, so there are 2 aspects of this at least. One of them is the P&L short-term aspect, where my comment was related to. I do not foresee a short-term negative impact on our P&L simply because the ARPU is significantly lower than 650. But you are absolutely right, and then you're touching on the strategic element of the whole pricing of Russia. That when players start introducing these unlimited offers, now of course at a relatively high level of 650, it is fundamentally wrong, and it does limit the long-term opportunity for the industry to continue keeping at least an ARPU growth that is on par with inflation, so that the business can get a decent return on the investments you do in our networks. Now, I think it's important not to see these things as permanent, even though they get introduced at some stage. We've seen from other markets, and I remember how this played out in particularly in Scandinavia and Sweden, how you had unlimited for a certain period of time, and then the industry moved away from that into more of a normal bundle approach again. And that is, in my opinion, likely to happen at some stage also in Russia. So let's not extrapolate this into forever and take the negative view on it. But again, since most of our customers are on lower bundles, it doesn't impact our short-term P&L in a negative way. Strategically, unlimited is wrong, and we have always advocated against it. When it comes to spectrum fee for 18, as we have outlined, there is an effect of that in the third quarter. The effect will be a bit bigger in the fourth quarter, but it has been communicated clearly as a one-off for 18. So to the extent that we are aware, this is not a recurring cost into 19. And the free cash flow guidance, John?
When it comes to that, the guidance, yes, you are correct in saying that it is the currency that is the driver for this. And when it comes to the CapEx, that is in the range that we had stipulated in the beginning of the year. So it's not that drives the changes as such, or no changes, but the pressure downwards.
Thank you so much. That was very clear. Thank you.
We will now take our next question from Stella Cringe from Barclays. Please go ahead.
Hi there. Good morning, and many thanks for the presentation. If I could ask a couple of things, please. Firstly, in Pakistan, so it's been a volatile few months from a macro point of view over there. How do things look at the moment with regards to upstreaming dividends? Do you think that there's some constraints there? And the second question would be on refinancing. So, of course, you have the additional cash that you want to use to pay down debt, but when I'm looking at the whole debt structure, the debt maturity profile, obviously quarter by quarter it's becoming a little bit more short dated. So I was wondering, what are you thinking about refinancing? Obviously the bond markets have not been great the last few months, but if there was an opportunity there, would you be potentially interested in trying to extend the maturity profile? That'd be great. Thanks.
When it comes to the Pakistani question of upstreaming, as you are aware, Pakistan have had challenges with their currency reserves, and as a result of that, it has been a challenge of getting approval, of getting the money out. So as of now, it has been difficult to declare dividends from Pakistan and upstreaming it so far this year in 2008. There are some. You can say that it's from some very dark to a slightly lighter grey. We're seeing some opportunities that it might be eased off slightly, but we do not think that upstreaming cash from Pakistan will sort of come back to the average of the last 3 years that has been sort of the going rate. So we still think it's going to be restrictions and restraint, or not restrictions, but restraint in giving approvals of upstreaming. But hopefully it's going to be at least opportunities to upstream some. Coming to the structure of the down payment of debt, as I said, we are looking at both public and bank debt in that regard. And when it comes to that structure, we'll announce when we make that decision. We will announce that. And other than that, I not want to speculate as of this point.
Okay, that's super. And if you don't mind me asking just a bit more of a specific question. So there's the Banglalink maturity, and there's also the debt, as you said, you do guarantee within GTH, and you understand this is a kind of fluid situation, on the GTH side as well. But what's the thinking at VEON? When it comes to Banglalink, what's the base case there for how that's refinanced? If there is a cash squeeze at GTH while this situation is ongoing and resolved, are you still willing to provide intercompany loans to help smooth the kind of interest payments, etc. there? Any comments on that would be great.
Well, when it comes to the GTH situation, we kind of agree that the situation is a bit fluid. And whether that is relating to our approach or the other stakeholders' approach towards the situation, I don't think that we can agree on that. But when it comes to the debt structure, I do think that we are intermediately helping or funding GTH in a period which GTH needs to resolve. They also need to resolve the challenges of their funding structure in Banglalink. And I do think that the board of GTH will take those into consideration when they are looking at, or I hope they will take those into consideration when they are proposing the rights issue and the need for capital going forward.
Okay, and on the Banglalink?
Well, I thought I said that because GTH needs to handle the situation as such. So, as I said, I hope the board takes into those consideration of the refinancing need in Bengalink that's coming up in first half or the late first half of 2019.
Sure. No, I definitely appreciate the comments. I guess I'm more just from a from a VEON credit investor perspective. There's obviously the kind of cross default situation and number of points of the capital structure. So it's more just kind of looking out for just to make sure there's kind of no risk coming onto the VEON side as well.
Well, of course. I mean, we will look at this as the majority owner of GTH and also making sure that our structure as a whole in VEON is taken care of. So we will approach this both as the careful with a careful view of our total debt structure in VEON, together with our responsibility as the major shareholder in GTH.
Okay, understood. Many thank you.
We will now take our next question from Andrei Kabazek from UBS. Please go ahead.
Hi, thanks for taking my question. I just want to get back quickly to Russia. So your service revenue growth rate dropped from roughly 3.5% to 0.5% in the third quarter. I just want to understand in terms of your like-for-like sales, what that would look like if you have any estimate, because you said that the sales were impacted by your pulling out of the alternative sales channels, and maybe they were also influenced by a slight curbing of exposure to the third-party channels. So if you could elaborate a bit on what your like-for-like sales would have been, and what part of the decline in the sales was sort of self-inflicted, and how you see this going forward. Thank you.
Yeah, I think overall the numbers for the third quarter are pretty good in terms of the organic development. We see that the shift from one set of retail to another to the preferred retail is coming along quite well. There is a cost element or a transition element related to going out of the alternative channels. And I would also point out that the comparison to last year, the third quarter of last year, was a very strong performance. So I think you see the numbers over a longer period of time, and also this third quarter development from Beeline is pretty strong.
Okay, thank you.
We will now take our final question from Mandy Singh from Morgan Stanley. Please go ahead. Your line is open.
Yes, hi. Thanks. Just one follow-up. Given the IFRS 16 adoption due in 2019, I'm just wondering whether that had anything to do, or maybe is it driving any change in your tower sales strategy? Because if the whole purpose of selling towers is not going to be fulfilled, if you have to still continue to report that as debt on the balance sheet, then maybe that is why. Is that something to do with your tower strategy at all?
The clear answer of that is no.
Okay. All right.
No, but
thanks.
But it has no effect. So it's not the background. So it's a very clear answer. No.
Yeah, but what I'm wondering is, should we continue to expect tower sales across your portfolio, given that Russian tower sale also didn't happen, Pakistan one also didn't happen? So is there a continued strategy still, or there is a change in the strategy there?
There's no change in the strategy as such, as I said. So the question is whether IFRS is affecting our strategy or towards how we look at the towers. No, it does not.
Okay, thank you.
As there are no further questions, I would like to turn the call back for any additional or closing remarks.
Well, I would just like to thank all of you for participating and listening to us. As we said, good operational performance, good organic growth, both on revenue, EBITDA in the third quarter. Good trend line so far this year. And I think we're well on our way to deliver on our targets for 2018. So again, thank you, everybody.
Thank you.